Just for some background story, we see these purple bars marked up on the screen. These were key levels that were proven in the past on gold. Going back to the 1 hour time frame, let's take a look at Monday as a starter. So as I mentioned, the purple bars were just 4 hour key levels that we marked up based on the history of gold. But for the start of this week, we see our first entry would have been around 1945. As you can see, the orange trend line I drew up on the screen was going upward, and on Monday we see it broke below that trend line, which means we now have a break of structure. So be sure to check out my other Forex video explaining the basic terminologies about Forex, particularly the 4 chart phases that every graph and every Forex pair will go through. So as I mentioned, we see a break of structure. The market closed below this uptrend, and we see that would have been our first point of entry for a short. And we see that this level of the purple bar was also broken. You would have taken profit on this level here, 1927. And the reason for this is, again, if you look left, just marked on an area where we see a lot of wicks simply just did not go through or close above or below quite often, and oftentimes it rejected it, so it pushed back or it pulled from that level. So that would have been your take profit level, because as we see in the real time, still focusing on Monday, the market literally rejected that area once again to climb almost basically to our entry point. Again, if you're not a person of principle, you're full-time in trading, you could have actually taken a second trade on Monday, but sticking to a principle, we want to take one trade every day. If you're dedicated to the charts, every time 1 to 2 hours pass, you need to make sure that you check in it. And once again, we see that key level that we marked up on Monday and then rejected. This red candle engulfs the previous candle, and this is one of those Japanese candlestick patterns where we know the market's going to now reverse. Obviously, alongside the rejection of this level, we would have gone for a short, but I forgot to mention for Monday was 1,700 pips average, and once again today another 1,700 pips, or potentially even more. And all of these trades we see a 1 to 2 to 3 ratio on average. Place the stop loss usually on a normal pair it will be 60 pips, because there is drawback as we see on Thursday's trade. A little bit of a drawdown, but ultimately the market still went in the direction we had analyzed, right? Make it a tradition of yours, put your stop loss at 60 pips for your entry, just to ensure that you don't get stocked out. Sometimes you might get stocked out, so 60 pips is not guaranteed. Well, in this case it's gold, so it's 600. You stick to principle, and like I mentioned in my previous video, as long as you have majority of your trades are profitable, ultimately you'll still come out with a good profit. The second part of Tuesday, we see purple level that I marked up previously on the 4 hour time frame was rejected as well. Once again, if you were a full-time trader, you would have caught this because it's happened within 2 hours. Market moved all the way down and then all the way back up within that 2 hours. But ultimately, you could have also gotten a trade on this level as well. Or like I said, if you're a swing trader, you would hold it all the way to the next purple level. As we see the market moved all the way from Tuesday to Thursday between these purple bars. But that's why I said I want to focus on both, you know, the short trader, the swing trader, and yeah, any kind of trading style that you like, you will adapt to. If it's you only want to trade during the day, close it, call it a day, or you'd like to hold the trade, get more gains, if you can put it that way, you can do that as well. So moving along to Wednesday, this was early in the morning. However, had we missed that, you would see there was another opportunity once again at 10 or 11 a.m. As usual, the market usually breaks a certain level of resistance or support, and when it breaks, it's either going to continually move or it's going to retest that area to go long once again, or short. It depends if you're going for a buy or sell. And as we see on Wednesday's situation, we had moved between the sub levels using Japanese candlestick patterns. That's how you would identify the long once again, and you could have caught another 1,700 to 1,900 pips. This kind of pattern happens on almost all pairs. If you choose the pair that you like and you stick with it and just do backtesting, you will see a lot of the times the market move in that 5 movements or whatever you want to call it. Here we have 1, we have 2, we have 3, we have 4, and we have 5. Funny enough, after that market move 5 in the downwards direction, we see that it continued again in the upward direction, also in 5 moves. So 1, we have 2, we have 3, we have 4, and we have. That was the upwards, right? But you get the point. Moving along to the second part of Wednesday, we see once again we could have gotten a second trade on that day. As we see on the 1938 level, the market was rejected once again with a bearish engulfing, and it fell short again, not all the way to the next sub level or the previous purple box, but fell all the way to this level. Could technically have have gotten a buy in here, but the reason I placed the buy over here because this was our previous key level, right? And we're waiting for key levels to be broken before we buy, and not before that, because the market could have easily rejected this area, which we see it did do a little bit in part. However, like I said earlier, if you're using the 60 to 600 pips, depends if it's exotic pair, you would still be safe within the drawdown. And then we saw the market move back up to the destination we had. Going on to the second part of Thursday, we could have potentially taken a short here as well, since they rejected this area. But because, you know, the previous sub level was so close, we might not have wanted to go into that. The market actually came up to reject that area once again, but I could have obviously faked it and gone continually up again, right? The market moves as it wants to. We just observe, we wait according to what we see and the timing that we see it happening, based on market open, the market's closing. From what we see, gold tends to move very much in the early morning phase. Trading your own pair, make sure that you get adapted to the most volume for that specific pair and trade around those times. But as you see again on Friday, we see rejection on this level over here, which would require for a short. First TP would have been the sub key level. Otherwise, if you're patient enough and have the discipline, you wait for the second level. It is also Friday. You don't want to keep your trades over the weekend, so you'd rather just actually take profit. And once again, we see 1,800 pips. Overall, this came up to around an average of 8,500 pips. But as I said in the previous video, stick to the principles, and you just want to have a higher win percentage than loss percentage with a good risk to reward ratio, and you should ultimately still stay profitable in these trades that you're doing. So if you take a loss, don't feel bad, take the lessons from that and apply it. So put in that hours, do the back testing and watch the results work for itself. Thanks for watching, guys. Hope you enjoyed the video. Hit the like if you did. Comment below if you want to see more specific aspects of Forex I can potentially make a video about. Otherwise, sure to subscribe for the next video.